Ooh, I almost look important. Holy shit. All right, let's do this. We're notifying people that you're live. Jim, what's happening? Jim Sling, what's going on? Come on. There we go. And here we go. Here we go. Here we go. Here we go. Yo. All right. Jim Sling, what's happening? Aaron M. Nameless. Back again, huh? Ghost Line Coley. Coley? Cole. All right. Fisher Dank. Dakota. Dakota McGrath. Kiss the Heine. What a lovely name. Yeah, sure. It's time to lock. Dave Lillifant. Okay, Todd. David. Love makes no sense. That's a good one. Love makes no sense. Purge, Gregory, Jim Sling, what's up? Ada Bravo. Okay. Lindarella, good evening. Daniel, JC, Glazarus. Happiness Start. Lindarella, good evening. Tutal. Okay, 420. All right, and not you. Okay, all right. Anyway, you guys, good evening, good evening, good evening. Hi, hi, ho, all that kind of nice, neat stuff. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you guys along for the ride for a safe, simple, predictable, consistent 1% per week. Okay, let's do this thing here. All right, right there. And let's move this over to there. Let's move this over to here. Let's move this over to here. Let's do this right there. Let's do this right there. All righty, let's get out of that. Let's get started. All right, John, Scotty, Ricardo, Maltavan. Okay, John, GGCC, what's happening? Some comments in this live are filtered. Alrighty, John, Remy, CC, what's happening? Tara, good evening, Miss Tara. Mike, how are you today? Shattered Hippie. Shattered Hippie. Interesting name. All right. That being said, Lady J, good evening. Flash Frozen, what's happening? All right. Let's get ready to get started. Like I said, my name's James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. How do I do that? Well, first off, I start with pre-qualified dividend stocks. And what are those? Those are companies that have successfully been profitable for more than 2 decades, meaning they have increased their dividends to their shareholders for at least 20 years. Cham Lavender, okay. Connie D, what's happening? Jason, Deborah, Carport. What were your people? What were your? Forget it. I was thinking, what was your parents thinking when they named you Carport? Caroline, Chris, MJB. Ooh, interesting. All right. That being said, let's get ready to roll. We got a bunch of stuff to look at from yesterday. All right, well, let's take a look. Now, I'm going to breeze through a bunch of these. Let's see which ones shake loose, which ones look good. Jeff, Jurassic. Okay, hello, James. Hope you're doing good. I'm doing wonderful. Jay Moore, can we go over picking the best strike price and why? Jay Moore, well, that's an interesting question. We're going to take a look at some of them in a little bit and explain to you why we like those strike prices. Because think about it. Does it make sense? Well, first of all, we got to find a good stock. Okay, for that, we're going to go through a bunch that we have picked up over the week, which looked good last week, and let's see how well they look this week. Now, today's Tuesday, so money came, Monday went, Tuesday came, Tuesday went, so now we are looking at Wednesday. Now, Wednesday, usually the premiums for Wednesdays aren't that great, so we're going to go look at next week's numbers, all right? But we're still looking for that 1% every week, so let's go and see if we can get Jay Moore's question answered. Why and how do we pick up the strike prices? What are your thoughts on floating rate funds? Okay, Rob, thank you for jumping on in, and I appreciate you showing up. But Rob, I'm only investing in dividend stocks. The floating rate funds have nothing to do with the strategy in which I'm about to show you. Okay. Now, that being said, let's take a look at some of these stocks. First on the list, we have British Petroleum. Looked pretty good last week. Let's see what it looks like today. British Petroleum. Interesting. Now, British Petroleum, we're going to go right by it only because look at this right here. It's in a little bit of a downfall. We're going to be looking for the bottom. We haven't found it yet. Today was an update. Okay, great. Maybe tomorrow will be higher. Don't know at this moment in time, but I'll write down British Petroleum for next week. British Petroleum, BP. All right, so no to British Petroleum. Siri, okay, Siri looked good. What does it look like this week? Okay, again, interesting. Okay, I can't even read that name. Cobra. Okay, outside of investments, thoughts on the U.S. consumer. Lots of uncertainty out there. All right, calling all spacemen. I'm not quite sure. Thoughts on the U.S. consumer. Well, it's strange because I'm finding in my own family, we're having arguments about what's actually going on in society. Because I listen to certain people, certain news groups, and they say one thing. And then my kids and my other members of the family, well, they listen to someone else and they say the total opposite. Now, we both sit and watch the exact same news reports. And I look at it from one point of view and they look at it from a different point of view. So is there right, is there wrong, or is it all subjective? Not quite sure if that answers your question, because it really depends on what you want to believe. Okay, you can get a dozen people witnessing the same car accident and you'll probably get a dozen different stories. It doesn't really change the fact of what happened. Okay, let's give you the Trump and Zelensky incident. Okay, so they met, didn't go well. Okay, so you have one side saying, well, Trump was being a dick, and then you have another side saying that Zelensky was being unreasonable and unwilling to cooperate. Which one is it? So it all depends. It depends. Who do you want to listen to and who do you want to believe? Well, we're not going to find out exactly what happens until it actually happens. And then when it does happen, you're going to get one side saying one thing and you're going to get the other side saying another thing, and two totally different things coming together, but the same shit happened. I mean, we all want the war to stop. Why isn't it stopping? Well, you got Putin saying he wants to stop the war. You've got Trump saying he wants the war to end. Okay, you got Zelensky saying, I don't want the war to end. I want you guys to send me more money and more weapons. Okay, so who do you believe? Okay, and why is it that? And then why did Zelensky meet with Trump? And then why did Zelensky meet with the Democrats? And then why did Zelensky go to Europe and meet with the European leaders over there looking for more money? It's a question. It's like, what's really going on? I'm not quite sure if that answers your question, but it all going to depend on who do you want to listen to. Now, I have no desire whatsoever to get into politics because everybody has their own beliefs that they want to believe. Whether it be true or not, it becomes true to you with the certainty in which you want to believe it. Okay? Now, we can all see the sunrise, but we can all see it from different points of view, and it means something different to me than it does to you. But it's the exact same thing for everyone. Anyway, I don't want to get into it, so let's just not get into it. Calling all specimens. Differently, how do you feel about your friend's financial health? Generally, are things expensive? Oh, well, look at it this way. It's an interesting way of looking at it. But the way I look at it, yeah, things are more expensive than they were when I was younger. Because I grew up in the 70s and 80s, it is what it is. But everything is more expensive now. But on the flip side, I'm making 2 to 3 times more money than I used to before. Okay, when I first started, I'd work 2 hours in order to fill up my gas tank. Okay, so back in the 70s and 80s, 2 hours of my time equaled 1 tank of gas in my vehicle. Okay? So nowadays, 2 hours of my time pays for more than a tank full of gas. I'm not quite sure how you want to look at it. You know what I mean? Okay, neochromium. How oldish are you? I'm 61. I'm not that old. At least I don't think so. Anyway, we've got some questions over here on YouTube. What are we doing? Izzy, we're talking about dividend investing for weekly cash flow using safe, simple, predictable, consistent trading strategy so that we can consistently get 1% every single week, which comes to over 50% per year. Now, I did have a couple interesting conversations with a few people today. Now, those are people that, subscribe to my morning trading group where we trade every morning live, and we have a certain, set of rules and whatnot that we follow. We're looking for that, 50% per year, 1% a week type scenario. That's what we're looking for. So the consensus I came up with from more than one person is that when you buy a stock and it goes down, they feel uncomfortable with the valuation. All right, so let's say hypothetically you bought Siri at the high back in June or July. Okay, but now Siri's down here in the $20 area. Well, you bought it in the 40s, now it's at 20s, and you feel bad because it had a 50% drop. Okay, so before you came here and looking for a 1% every single week, okay, great, that's lovely, but how are you doing it? Okay, are you buying something and as it drops, do you complain? Well, if you're complaining and you have a hard time when a stock drops, you shouldn't be playing this game. Because stocks can and do drop 50%. Well, Siri right here is at 42 back in July. Then she drops down to 20. Well, that's a 50% drop. So that should be the time you should be thinking about getting into Siri because it already made its 50% drop. We're at 23. We're not in the 40s or 30s anymore. We did the 50% drop. We're down here at the bottom. That's where I want to get in. Okay, so I made the mistake of doing U.S. Steel and Harley Davidson. Let me just show you quickly. U.S. Steel, here's U.S. Steel. Okay, so I bought U.S. Steel at 41, which is right here, which is at the top of the channel. You see the channel? Between 36 and 40. Well, that's the channel right there. Let me open this up a little bit more so you might get a better idea. Not sure, but it is what it is. Okay, so the high is here, right around 43. And the bottom is here, right around 27. Well, that is a 50% difference between the high and the low. So if I'm buying it here at 41, because I did get U.S. Steel at 41, now it's in the 37, all right, but she did drop down to 30 when I owned it. And it is what it is. If you're not comfortable with seeing half of your money disappear on paper. Now, when I say never sell, scam, he'll message you from 5 other accounts with the same-ish name looking for your login information. Bither, how are you today? Yes, Bither, I do have 30 people pretending to be me, but it's not me. When I always tell people, you're new here, so don't be posting stuff like that because he'll message you from 5 other accounts. Yeah, that ain't it. I don't message people, Bither. Okay, so if you're getting a text message from someone who's saying it's me, it ain't me. I always tell people, you want to talk to me, send me your phone number. I will personally call you. So don't be doing that kind of crap, all right? That stuff, I just don't deal with that very well. All right, Neil, calling all specimens. There are 0 investments that return 1% a week. Okay, Residence Tech, the best hedge fund, annualizes 35. Okay, wonderful. I appreciate that. Thank you for that. Now, I do have to let you know, in case you're curious, because you're new here, you don't really know me for anything, and I don't know why you're saying something when you have no proof to back it up, but let's go take a gander at a few things. All right, let's go here. Let's go here to the 10-minute trader. Now, I'm not a hedge fund manager. I don't have any funds whatsoever. I'm just a regular, average, everyday person. okay? I'm just a regular, everyday person. I just started posting live with you guys. He doesn't stay in one investment, show your daughter's video. Okay, hold on a second. I don't know anything about JEPQ, do you? Hate to waste your time. Do you know anything about it? Hold on a second. Let's take one thing at a time. I'm going to deal with Bither for a second. Buy there. I don't know what that means. Steve Benno, waiting on a big investor to buy GPUS to get it started. Do you know any? Or are any watching? All right, Steve Bano, I have no idea what you're looking for. Okay, so I don't know what to tell you there. Let's go take a look at Bither for a second. I don't know if that's his name or not. All right, weekly trades 2024. Now, Bither, just in case you didn't know, I have all my trades posted online, the winners and the losers. Okay, here's all the trades here. You can take a look at each and every single one. Okay, Harley Davidson, Riley, MPW, Walgreens, Intel, blah blah blah. They're all time stamped right there. Okay, and the strike prices, the calls, the options, what kind of a trade it was, what the profit was, blah blah blah, all that stuff. And yes, I do average over 1% per week. This week, 1.4, and that week, 3.12. What is this one? Glasses. That's what this is. 1.6, 2.2, 1.7, 4.7, 2.5. You can check the numbers yourself if you want. Just click on the stock trades if you understand how to read them. Okay, buy 1,000 shares of MU at 107, sell the 108s, pick up 202. That's more than 2%. Okay, and then you have all these others. You know, do yourself a favor. Do that. Don't say stuff. Don't like that. That's not nice, especially from someone who doesn't know me. Okay, and no, I don't have several other accounts, and I don't text anybody anything. I don't text. I don't email. I don't do what's that damn thing? Telegram, and I don't do WhatsApp. If you're getting something from someone saying it's me, it ain't me. Because when I say right here live every night, you see my lips, all blah blah blah, all that kind of talking and shit. I say, you want to talk to me and send me your number, I will personally give you a call. If you don't believe me, put it down in the chat and see how many people say, yes, he does actually call. Okay? Now, I say that every night, and about anywhere between 2,000 and 20,000 people come through the 7 different channels that I'm on, and about 1 or 2 people a night will send me their number, and I do call them. Okay? So let's keep on going. Sean Grady. How did you do today? A bit turbulent. Okay, Sean, you're under the impression I actually sit in front of my computer. I have no idea what happened in the market today. Seriously, I don't. Because I don't sit in front of my computer all day. Okay, I get in the morning. Okay, I'm on for about an hour with my morning trading group. We go over the trades that we already have open. And then we see what is the best scenario for us so we don't lose. So far this year, I haven't had any losses. Okay, just knock on wood. Superstitious, better be safe than sorry. That being said, let's get my tea here. God, it feels better already. So, calling all spacemen. There are 0 investments that return 1% a week. Residence Tech, the best hedge fund, annualizes at 35%. Okay, great, fine, dandy. I'm not a hedge fund. I don't have any type of fund. What I have at the moment is a trading, well, several trading accounts. I got about 7 of them, and I share 3 of them with you guys. Each and every single one averages over 1% every single week. Now, what I was getting at, calling all spacemen, okay, once you go down and look through all the different, see, I remember I show you, I just share 3 different accounts with you guys, so you can take a look at the numbers. Yeah, the numbers aren't working out quite right, so I have to redo them. And the person I have redoing it is not really, okay, let's go all the way back to January. Okay, so basically what I wanted to show you, okay, week 1, first quarter, week 1, okay, January 1st to the 5th. Okay, these are the trades that I made. Okay, CVS, General Motors, LUV, which is Southwest Airlines, Comcast, and Ford. Now, but I made 2.39 for this week. And this week here, I made 2.1. Well, look at the trades. Macy's, General Motors, Ford, CVS. Okay, you just do the math, divide it by what the account started out with. This account here started out with 117,000 at the first thing of January of last year. This one started with an even 1,000. Okay, so if you do the math, hypothetically speaking, it should work out right. But it's not what I wanted to show you. What I wanted to show you is down just a little bit further. Right there. Now, I first started sharing all my trades August 31st, 2011. Now, this is a snippet from a blog post that I started back in 2011 when I first started sharing this trading strategy. Now, I've been trading since the 90s, but it wasn't until August 31st that I started sharing publicly. And you could actually go down and take a look at a lot of these entries. Here's 2012. Oh, year-to-date profit and loss, 94,000. Okay, joy. Here's 2013. Here's March 2013. You'll notice 1-year chart, 90-day chart, 30-day chart, and I put a little blurb in there exactly what I'm doing. Well, I've been sharing it since 2011. And the only reason you're seeing me here now was because last January, last December, somebody showed me how to stand in front of the computer and stand in front of the phone and go live. Okay, fine. So I'm sharing my knowledge. All right. Now, you say nothing gets 1% a week. Okay, fine. I'll take your word for it. That's in your little world. In my little world, I average over 1% every single week. And I've been doing it for the last 15 years. Now, the reason I say for the last 15 years, because I've been trading for about 20. The first 5 didn't work out that great for me because I was trying everything that worked. And it wasn't until 2008 when my 9-year-old daughter asked me, Daddy, what are you doing? Can you teach me? Okay. So 9 years old, how do you create a trading strategy for a 9-year-old? Well, you can't make it too complicated. So it's got to be simple. It's got to be safe. It's got to be predictable, consistent, and no way for her to lose. So the trading strategy I'm about to share with you tonight for free, I'm not going to ask anyone to buy anything. Do I get shit to sell? Yes, I do. It's in the bio. Go find it, whatever you want. I've written 14 books, blah, blah, all that stuff. That's not what I'm doing here. Here, I'm sharing information for free. I'm not asking you to buy anything. Okay, I show you some simple investment strategy. We'll actually go through a couple of them and show you exactly how I get 1% every single week. Okay, I got a couple questions over here on YouTube. Let's do this. Okay, like I said, Sean, I remember you saying this, but today was a bit nutty. Don't you have underlyings? Yes, I do. Some of them must have been a little squirrely, not expecting hourly trades, just a reflection of the day. Okay, great. Antoine. So you accumulate 1,000 a week, you need 100,000 shares of dividend stocks. No, not at all. Okay, Antoine, you've been here a few times. Okay, now Antoine is a very unique name, and there's not very many people named Antoine that come through YouTube channels. So yeah, we've had a conversation before. Now, I get $1,000 a week. I do not need 100,000 shares to get $1,000 a week. Okay, so just sit and chill. Listen to a couple examples, watch a few examples, and then see if it makes sense. I'm not asking you to do anything other than ask that one question. Does it make sense? It either makes sense or it doesn't. So we're going to take a look at a few stocks. When we find something good, we'll actually do a trade on it, and then we'll see if it pays out the 1% like I'm asking. All right, so US Steel, we're right about here. Okay, it's not a perfect time to jump into US Steel only because, okay, your 30-day bottom was here, 30-day top. She pulled back, and she went up. Now she gapped down this morning, and then she's going down a little bit. So it's not a good time to jump into US Steel. All right, so let's look at something else. Okay, thank you, Antoine. Appreciate that. Now, Siri, we already said no to. Verizon, VZ. We're going to say no to Verizon only because it's at a 30-day high. Other than that, I do like Verizon. I do like US Steel. I like everything we've seen so far. Unfortunately, it's not always yes every single day. Stocks go up, stocks go down. You got to get them at the right time to make sense. Okay, so next on the list, Walmart, WMT. Okay, now we looked at Walmart the other day. All right. Okay, here's the high of the year. She drops after some profit taking, shoots back up. Monday was down, today is down. More than likely, this is going to find a bottom eventually and shoot around, go back up again. Okay, so we're not going to do Walmart either. Nucor, NUE. Down today again also. Here's your 30-day high, 30-day bottom. Look, she went up, she went down, looking for a new bottom, fine. When we find a new bottom, maybe we'll jump in. But until then, no. Next on the list, Grab, G-R-A-B. Okay, again, 30-day bottom, 30-day top, comes down, looking for that new bottom. We're just going to have to wait until we find one. Intel, INTC. Now, I do have some Intel. That's down today also. Okay, 30-day bottom, 30-day top, profit take. We'll be looking for the bottom there also. HE, isn't that Hawaiian Electric? Now, Hawaiian Electric, they stopped paying dividends a few years ago. And it's not a great time to jump into Hawaiian Electric, especially after the fire's over there in Hilo. Okay, down, she goes up, here's the high. Now she's starting to come back down again. Okay, fine. 2-3 weeks, it'd be a good opportunity. But not this week. Home Depot. Oh my goodness, did anything go up today? Okay, 3 days ago, way up here. Drops, back up, back down. Not today, not for Home Depot. Target, TGT. Whoa, big drop today on Target. Look at that. Drop, big drop. Okay, we're down here at, where are we now? Bottom 112.53. That's pretty damn low. All right, well, let's keep on moving. Occidental Petroleum, OXY. Wow. Now, I haven't seen this in a long time where every single thing we looked at is down today. Okay? Occidental Petroleum's down also, but it was an up day. Okay? She opened up lower than yesterday's close, and she went up a little bit. But she did make a new 30-day bottom. All right. Texas Instruments, TXN. Now, that one doesn't look that bad. I don't know. All right. Here's your 30 days ago at 180. Drops down to 177. Shoots up to 205. Got your profit taken 1, 2, 3 days to the upside with Texas Instruments. Okay, it is in an upward trend, not the greatest in the world, because you got 1, 2, 3, 4, 5 down days in a row. Okay, now Friday was an up day. Look at Monday, a higher high, a higher low. Well, look at today, a lower high and a lower low. Down also. General Motors. Wow, I do have to admit, this is the first time I went through this many stocks and everything was down. But here's General Motors. 30-day high, 30-day bottom. Okay, we're just waiting for a bottom and waiting for it to turn around. So are we going to wait for a couple of days until we find bottom before everything's done? Well, I'm okay because I got into everything on Monday. Monday, Tuesday. Okay, well, yeah, I got into everything on Monday. Today I didn't do anything. I just take a look at my positions, and I did swap a few things around. All right, so let's keep on going. Nick, hello, sir. Appreciate your feedback on UPS. Possible bear flag. Like your opinion of checking in 3 weeks. Thank you. British Petroleum is another call option I'm in. I'd appreciate your outlook on that as well. Okay, so Nick, number one, I don't buy options. I sell options because 80% of all options expire worthless. So I'm not a buyer. I'm a seller. Okay, I don't want to be in that 20% group where only 20% actually win. Yeah, they do pay off nicely, but how many of them do you need to have to offset the losses? Yeah, I don't buy them, I sell them. Hans, hello. Okay, so you don't count unrealized losses then? No, Sean, it's not a loss until you take it. Now, if I bought, well, actually I did. I bought a US deal at 41. Now it's at what, 37? Now, it's an unrealized loss, but it's not really a loss. Because what can I do with it? All right, hold on a second. US deal. Okay, so I'm into US deal at 41.25, which is right about here. Get my glasses. 41.25, right about there. Okay? Okay? Down, up, down, up. Now she had a big drop today. She's at 37.70 at this moment in time. So I got it at 41. Am I going to sell it at 41? No, because the numbers just don't look right at 41. So let's go right here. Let's go right there. All right, there's the 41 right there. Okay, so I own it at 41. So that allows me to sell a 41 call strike against it. So give somebody the right to buy it from me at the same price I just paid for it. Well, it kind of makes sense. So here's the thing. I'm into it at 41, which is up here, and it's currently down here. So where do I think it's going to be by the end of the week? Well, by the end of the week, I don't think this is going to hit 39 or 40. See, the 39's right there. So I could sell the 39s and pick up between 15 cents and $1.85. Well, I could get my 1% out of that because it's going between, 15 and 185. That's a big spread. Now, the spread is usually not that big during the hours when the market's open, between 9:30 and 4. Well, right here gives us an idea what we can expect. All right. So the 38s are going for 75. That's a nice price. The 38.50s, we can't tell because it says 0 to 96. The 39s, 15 to 185. The 39.50s, 24 to 52. As you can see, the numbers are all over the place. But for the most part, I'm picking up a halfway decent premium. It may not be a full 1% on my 41, but let's say hypothetically I can get 30 cents a share. Now, 30 cents a share on a $41 stock is about 0.8. It's not a full 1%, but what does 0.8 look like? Calculator. All right, clear that out of there, clear this out of there. So we get 0.8 and we multiply that by 52 because there are 52 weeks in a year. That's still 41%. If I'm going to get 1% every single week, that's 52% a year. And that's simple interest. That's not compounded. Once you start compounding, it's a different story. It's a different ballgame. But even at 0.5%, you're still making 26% per year. Well, that's pretty damn good. But I got a lot of flack from some of the subscribers saying, well, the stocks keep going down. I said, well, what did you expect? Just because you buy them, you automatically expect it to go up? It doesn't work that way. Stocks go up, and then they go down. And guess what they do after that? They go up, and then they go back down again. That's all they do. They go up, they go down, up, down. That is it. If you're expecting anything different just because you're jumping in the game and you're buying something, you're sadly mistaken. And I'm terribly sorry for ranting. It's just, I feel awkward because it's a simple trading strategy and people are making it complicated. Because most time, people buy a stock and they just hold on to it. And a lot of people say, well, I'm going to put a stop loss in at 5%. Okay, fine. It defeats the purpose. Why are you buying and automatically setting yourself up to sell something? Well, stocks go up and then they go down. They go up and they go down. If you buy a stock that you like and it consistently increases its dividend every single year, well, you're getting higher dividends every year. And you're able to sell a call option against it. It's just another strategy to help you make more money. Is it guaranteed? No. The only thing guaranteed in life is death, taxes, and disappointment. Okay? So yeah, if you buy something, expect it to go down, then expect it to turn around and go back up again. Now, last year, I bought Target at 135. Okay? That sucker went from 135, dropped all the way down to 102. And I still held on to it. And I still sold covered calls against it. Okay? It did eventually return back up over the 135. I got out and I collected, let me think, 3 dividends and like 30 premiums. Well, those 30 premiums paid every single week. Give me a second here. What do we got? Okay. I know this, but you can't act like your method has no risk and it's not capital efficient. And you might hold these for a long time. You're absolutely right, Sean. It is simple, but you need a lot of money and it's still risky. Okay, Sean, I agree with you. There's risk in everything in life. But when I buy a stock, let's say Ford, for instance, is there a risk in Ford? Yeah, Ford could go bankrupt and they could disappear overnight. Highly unlikely, but it is possible. I mean, they've been here for over 100 years. JP Morgan, well, they've been around for 100 years also. Could they disappear? Yes, they could. We saw it happen with Lehman Brothers. Okay? It could happen. So when I say rule number 1, because remember I told you I created it for my 9-year-old, simple, safe, predictable, consistent, all that kind of stuff. Well, it comes with the rules. There is no simple way of doing anything without there being a catch or without there being rules to go along with it. Okay, so simple, safe, predictable, consistent, no way for my daughter to lose. So there were certain rules. Rule number 1 was, if it's not on my list, do not buy it. What does that mean? Well, specifically, every single stock that I like, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, that's about 300 stocks. Stick them into the calendar. The calendar tells you exactly when they pay their dividend. Why is that important? Well, because before the EX date, 4 dates, okay, the announcement date, the EX date, the date of record, and the payment date. If you don't know what they are, they're really not that difficult. The announcement date, well, this is what we made, this is how we're going to pay you, and this is when we're going to pay you. It's just telling you what they're going to do. The second date, the EX dividend date, that is represented by these little green dots. Each one of these little green dots represents an EX dividend date. What is that? That is the last day the stock trades before the dividend is paid. Why is that important, do you think? Well, it's important because here's Walmart right here on the 21st of March. March 21st, Walmart. If I want to collect the dividend on Walmart, I have to buy it any day before the 21st. That means the 20th, the 13th, the 14th, the 26th, the 6th, the 3rd, the 11th, the 18th. Any day before the EX dividend date. And then I have to hold it for a day, which is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. That's when you get your money. So why is all that important? Well, before this date here, the stock has a tendency to increase in value. So if I'm wanting to buy Walmart, I want to buy it 2 weeks before this date. Okay, that's the week of the 3rd, 4th. That's actually this week. Okay, I want to buy it this week, preferably on a Monday, and then do what's called a covered call. It's a simple, safe strategy, one of the safest. So Walmart, let's take a look at it right now. WMT. Oh, here we go. Here's Wally World right here. All right. So Walmart, if I want to collect the dividend, has a tendency to go up just before the EX date. Well, that's this week. Doesn't look that good because today was down and yesterday was down. All right, but here's the thing. The premium on Walmart, if I buy it at $95.84, the closest strike price is going to be the 96. Okay? And at 96, I'm only picking up 58 cents. But that's for this week, which means I only have 3 days left of this week. So you're not going to get a decent premium. So let's get rid of the 7th, which is this Friday, and go to the 14th, which is next Friday, which gives me 10 days before it expires. 10 days. So what's going to happen in the next 10 days? Okay, so the 96 is going for $1.19. That is over 1%. So what's got to happen? Well, what's got to happen is if I buy it today, okay, 95.84. I probably want to do the 95 because look, the last trade was 94.97. So hypothetically speaking, it should be 95. And then 95 is going for 165, which is over 1.5%. Well, that's even better. But you got to ask yourself the question. And there's a lot of questions to ask. Number one is, does it make sense? Okay, if I buy Walmart tomorrow morning at 95, because the last traded price was 94.97, okay, hypothetically speaking, it should open up somewhere close to the close. So somewhere around here, between 94 and 96. So if I buy it tomorrow, now wait until the market opens, because once the market opens, these numbers will change. Give you a better idea of exactly how much to expect. Well, the bid is if I'm selling. The ask is if I'm buying. So if I'm buying the stock, 95.84, and I sell the 96s, I'm bringing in 119. So let's actually do one and see what it looks like. This way you can answer some of the questions, especially by calling all spacemen. Nothing gets 1% every single week. Well, let's take a look. Let's get out of that. Let's change this right here from single to a covered call, because the simplest strategy is the single. Just buy the stock. That's it. That's the simplest, easiest strategy there is. Just buy the stock. But here's the thing. There's no profit to be made unless you sell something. So if you buy in the stock, you have to wait for it to go up. Well, how about selling a covered call? What does that mean? Well, if I'm buying it at 95.84, I can sell somebody the right, which means they can buy it if they want to. That means I'm going to hold it, and they're going to pay me a premium, which in this case is 119, just to hold it until Friday. Okay, if on Friday it's above 96, then that person is going to buy it at 96. If it's below 96, I keep that 119, and then I sell it to someone else next week. But number one, does it make sense? Number two, do I like Walmart? Number three, do I like Walmart at this price? Number four, am I willing to buy Walmart, hold it until the day I die, or until it hits my 96 strike price? And then sell a covered call every single week against the position and collect a dividend every 90 days. So if a stock goes up just before the dividend, okay, dividend, stock went up, dividend, stock went up, see, stock went up, dividend, stock went up, dividend, stock went up, okay? Stocks have a tendency to increase just before the dividend, and only a certain few, okay? Those are the dividend kings, dividend aristocrats, dividend champions, blah, 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 blah. Does it make sense? I'm only looking for 1%. So back to the trade again. If I'm buying it for the 96, 95.84, selling somebody the right, not the obligation. It means they can do it if they want to. They don't have to do it if they don't want to. But either way, I'm holding it for them for $1.19 per share. Okay, so they're going to pay me $1.19 per share, and I'm going to hold on to that stock until Friday or until they exercise their right to buy it from me. So if the stock goes from where it is now, 95.84, let's say it shoots up to 150, whoever bought that option from me, well, they're going to exercise it and take it away from me at 96, because that's what I sold to him or her. I don't judge one way or the other. Okay, I'm only looking for the 1%. So let's actually do one. Let's change this to a covered call. Okay, the 96 is right there. Okay, let's do just one contract, which is 100 shares at the market, because I want it filled first thing in the morning. And what does it sound like? Well, it sounds like buy one covered call of Walmart, 100s, those are the weeklies, 14 March 25, that is next Friday. Not this Friday, because there's only 3 days left. which means you only have 3 days of time value. Now, hopefully you all understand that, because on first thing Monday morning, you have 5 days of time value. Monday, Tuesday, Wednesday, Thursday, Friday. Monday's gone, you just lost 20%. Tuesday's gone, you just lost 40%. There's only 60% left. So why bother? Go to Monday. Next Monday. Well, now I have 10 days of value. And 10 days of value are paying me $157.50 for each contract. All right, what is each contract costing me? $9,443. Well, let's see what that looks like. Now, if you think that's too much money, well, don't do Walmart, because Walmart, it's it's almost $100 stock. Okay, so we take the profit, which is $157.50, $157.50, and we divide it by the cost of the trade, including commissions and fees. $9,443. And that gives me a grand total of 1.66%. See, the calculator's right there. 1.66% for 10 days, which is basically a week and a half. Okay, that works for me. Now, do I like Walmart? Yeah, I like Walmart. Do I like Walmart at that price, 96? Well, yeah, I do. Am I willing to hold on to it to the day I die, continue to collect dividends every 90 days, and collect a premium every single week until it hits my $96 target? Yeah, I'm willing to do that. You got to ask yourself, are you willing to do that? This is not a game for the lighthearted. This is hard-earned money on the line. Okay? Now, I'm assuming most of you guys work for your money. 30, 40, 50 hours a week, 30, 40, 50 years of your life. I'm 61. I'm retired. I've been working since 1973. I don't have a huge amount of money. But the money I do have has to last me for the rest of my life. So I have to be safe, predictable, and consistent with my money. Hey, you guys just get to see what I'm doing. And am I doing it for you guys? Am I doing it to sell something? No, I'm not. I'm doing this to create a, what do you call it? A legacy for my children and my grandchildren. Because eventually, my children and my grandchildren will say, okay, what do I do with this money? How do I get ahead? How do I invest my money? Because my kids are only in their 20s and 30s now. But eventually, they are going to retire also. And they're going to think to themselves, well, how did Dad do it? How did Papa G do it with what he had? Okay, the stock market's been around for 400 years. I'm not delusional thinking that when my kids are in their 50s and 60s, the stock market won't be around. I'm not delusional thinking that. It's been here for 400 years. 1602 was the first dividend stock sold, with the promise of sharing the profits of the company if you invest your money into it. That was the original promise made by the VOC, the Dutch East India Shipping Company, the board of directors, or whoever they were, the businessmen that got together and say, hey, let's go to the general public. Let's go to the peasants and see if the peasants want to invest in this business opportunity. Well, they did. The VOC, the Dutch East India Shipping Company, actually ran for 198 years. Finally went belly up because of greed and mismanagement. It happens. I mean, just look at our government. It's fucking greed and mismanagement. Look where the hell we are. Needless to say, let's keep on keeping on. All right. So, do I like Walmart? Yes, I do. Am I going to buy it this week? No. All my money's already tied up. It's tied up in Walgreens, U.S. Steel, Harley Davidson, Kohl's, and a few others. Okay? So, yeah, I'm not going to do Walmart, but that's how the numbers work. Number one, pick a good company that you're willing to hold on to. Number two, never sell for a loss. Number three, make sure the company is consistently profitable. We checked the other day, there's 9,964 companies. That's a lot, okay? But only half of them, 5,500 and some weird number, actually pay a dividend. Now, what is a dividend? Well, a dividend is a portion of the profits that the company gives back to the investors, and that's us. Okay, so if you're looking for capital appreciation, you're in the wrong place. I'm looking for cash flow. That's it. I don't want to buy a stock at $5 and sit and wait 5, 10, 15, 20 years for it to go from $5 to 20, 30, 40, 50 bucks, double, triple amount. No, I don't want that. I want weekly cash flow. And I just so happened to come up with a strategy that I taught my daughter because she's 9 years old. And how do you keep her attention? It had to be less than 5 or 10 minutes. So let me introduce you to the princess. Where is she? This is it right here. Videos, the oldest. Here she is right here.
Hi, I'm Gracie, and being part of my internet website called Thingy, which my dad doesn't let me call me that, but I do. Being part of that, we're going to be getting weekly lists.
That's her.
Of stuff.
This is me 15 years ago.
21 days in the month of March. What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends. Anyway, seriously.
Listen closely. This is why I was saying 15 years ago.
Just one. January, February, March, that's 12. 12. You can buy 12 different companies the whole year and still make up 20% a year. That is easy. One trade a month. Who can't do one trade a month? But you want to pump it up a little bit? Let's do 2 trades a month. 20 days. 20 days in the month of January, you can do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year, and if you get at least 2%, that's close to 50% a year. 50% per year. That's cool. Anyway.
Saying the exact same thing I did 15 years ago. It was the video. Yeah, all right, 12 years ago. When I was a little on the younger side. Had less gray hair. All right, let's get out of that. Get out of that. Get back to where we were. So needless to say, I've been doing this for a while. And yes, I have been posting all my trades. And no, not a lot of people knew about it. Okay, so I've been doing this for the past 15 years on YouTube. And I only got like 2,300 followers on YouTube. But on TikTok, total different stories. Over 30,000 people following. Okay, because maybe they like the idea of 1% every single week. Who knows? But needless to say, let's keep on taking a look at what we're looking at. All right? Investing in dividend stocks, good quality dividend stocks. Okay, I'm not looking for the highest dividend. Okay, I'm looking for consistency of profitability. Okay, now a lot of people think, hey, it's a high dividend, it looks good. Yeah, no. It's a little bit more to it than that. Okay, Neo, you want to take a look at JEPQ? Now, I know JEPQ. I don't like it, and let me show you why I don't like it. Just sit tight for a second. I'm going to show you why I don't like JEPQ. Maybe you'll agree with me. Maybe you won't. Okay, first and foremost, JEPQ. Number one, it's a monthly optionable stock. Now, remember I told you what rule number 4 was? Weekly options only. If I'm looking for weekly cash flow, I get 2 opportunities. 1, find something that sells on a weekly basis. Weekly stock options. 2, sit in front of my computer looking for patterns to trade. Yeah, I'm not going to do that one. Now, I could if I wanted to, but that's not what I want to do in my retirement. I'm retired. I don't want to sit in front of the computer. 10 minutes a day, that's all I want to do. And it's not that difficult. Okay, so JEPQ. That's only one reason. Let me give you a few more reasons why I don't like JEPQ. Right there. JEPQ. Now, right now we're at Yahoo Finance. I always suggest people find a good financial website, learn how to navigate through it, look for information. Surgical, thank you for that. Look for the information to help you make your decisions. Well, here it is, JEPQ. First thing I want to do before I look at anything else, I want to go to the historical data, also known as the data stream. So what's in the data stream? Come on, waiting for it to load. Here we go. All right, you see that? The first row is the date. Second row, that is the opening price of the day. Next is the high of the day, low of the day, close of the day, volume. Okay, that's the numbers. Now, I want to look at historical prices, specifically the dividends. Because if a dividend is a portion of the company's profits they give back to the investors, Well, if that increases every year, well, logic, common sense tells me that if the profits keep increasing, the dividends keep increasing. So I will look at the maximum amount of dividends for JEPQ. Now, hypothetically speaking, is that right? Number one, 2022 is the first dividend. That's not 20 years. Okay, so JEPQ is not 20 years old. As a matter of fact, they're what, 3 years old? Doesn't work for me. But let's take a look at the numbers anyway, just for the fun of it. Hypothetically speaking, if the company's consistently profitable, this number should get higher and higher and higher as time passes, right? Okay, so let's take a look. The first dividend, June 1st, 2022, 38, 34. Why did it go backwards in the first one? Seriously, the first dividend is 38, the second one's 34. You're going backwards? That doesn't make sense. And that is over a 10% decrease. Do the numbers yourself. From 38 to 34 is 4 cents. Not a lot of money, but it is over 10%. So it's a 10% decrease in the very first month. Not off to a good start. Okay, month number 3, you're up to 41. Then to 55. Then you drop to 38. That's a 17-cent drop. Okay, well, 17 cents on a $55 stock, it's about 17%. 17% drop. Okay, 38, 34, backwards. 41, higher, higher, lower. 68, 55, lower. 58, 44, lower. 43, lower. 45, 48, 36, lower. 37, 37, 45, 42, lower. 42, 42, 34, low. So on and so forth. 2 steps forward, 2 steps back. 3 steps forward, 1 step back. No, no thank you. JEPQ is not consistent with their profits. But hold on a second, it actually gets a little worse. It does. Go to the summary. The summary actually gives you an idea of the high, the low, the volume, all that kind of nice, neat stuff. And it also gives us this fun little number right here, the yield, 9.47. All right, so it's not that bad, 9% per year. I've seen some that are worse. Actually, Spider, SPY, pays 1.17. This is a hell of a lot better than the Spiders. And the Spiders are in the $500 area. This thing's only 54 bucks and it's paying 9%. Okay, but I'm looking for 1% a week. That's 50% per year. This would never make the cut for me. Okay, 4 years, not even 4 or 5 years old yet. Yeah, no thank you. So yeah, I don't like JEPQ. The numbers, they just don't work for me. All right, let's keep on keeping on. What else do we got here? Questions, questions, questions. I should have stopped this thing. Oh boy. All right, how oldish are you? I looked at that one. Popeye wants to take a look at T. Rowe Price. Now, T. Rowe Price is on my list, but what does it look like today? T. Rowe is big drop today, and it's a monthly. Okay, 2 no's here. Number 1, look at where it is. Big drop, and it's monthly. I don't do monthlies mainly because the numbers just don't work for me. I'm looking for 1% every week. You can't get 1% a week with a monthly option. And then you got to figure out where's it going to be in 30 days rather than 5 days. Now, 5 days is relatively easy to figure out where it's going to go. See here, I wouldn't jump in until it found its bottom. Once it finds the bottom, turns around, that's when I would jump in. So I would just keep my eye on if you like T. Rowe Price. Well, I don't trade T. Rowe Price because it's a monthly. The numbers just don't work for me. Neo, in 2 words, how much is it to join the group? Well, to get the best out of it, it's $100 a month. Bither, he'll message you from 5 other accounts with the same-ish name looking for your login info. Okay, Bither, thank you very much. You've already said that once before. Going to disagree with you, but hey, it is what it is. Calling all spacemen. There are 0 investments. Yeah, we looked at that one. I don't know about JBQ. We did that one. JP Morgan. Well, let's take a look at JP Morgan. JPM. Yeah, no. Okay, look. Okay, here's your high of the year. Profit taking, as soon as the profit taking is finished, it's going to drop until it is done. Plain and simple. It's going to go down until it is done going down, then it will turn around and go back up again. Plain and simple. All there is to it. Chasing Jack. Yes, he does call. Yeah, I did talk to Jack. He doesn't stay in one investment. Show you in daughter's video. Yep, I did that one already. Thank you, Neo. Chasing Jack. Thank you. Alex Sensation. Thank you for that. Calling all spacemen. For what it's worth, 50% a year is the best return track ever in the financial industry. No, not really. I've seen a couple of people get more than 50% per year. Okay, as a matter of fact, calling all spacemen. Last year I got 63 in one of my accounts. I got 73 in another account. It's like, yeah, nice. All right, are you a licensed money manager? Nope. The only license I have is a license to drive and a license to drive you crazy. Okay, Neochromium would love to talk to you. Do you have a few minutes Friday? If so, can just give me a call. I'll DM you. All right, Chromium, send me your number. I'm not really, see, I'm retired. I don't have a schedule. So when you send me your number, I just pick up the phone and call. If you're not there, I'll leave a message, text me back, and I'll give you a call. But I don't really set a schedule that way. Sorry. Calling all spacemen. Citadel, Ken Griffin tries an average of 1% per month. So you're saying you're 5 times better than him. I have no idea who he is. And I'm not saying anything about anyone. All I'm saying is I make over 1% a week. Okay, now, back to, where is it? I already turned it off. Right there. Okay, weekly trades for 2025. Now, I haven't posted all of them, but week number 1 for this year, 6.19%. All right, what did I have? I had Intel, Harley-Davidson, US Steel, MPW, Altria, and Riley. Okay, they're all my trades. US Steel, MPW, Intel, Altria, Harley-Davidson, Intel, and Riley. Okay, week number 2, 2.33%. Week number 3, 4.87%. Do the math yourself. Okay, I'm not trying to sell you anything. It would be different if I'm trying to sell you something. I'm not trying to sell you anything. I'm just sharing information. I don't know why people want to give me a hard time. I'm sharing information for free. You know, I'd understand if I'm trying to sell something. Okay, Sean, instead of buying 100 shares, selling at the money calls, have you considered selling a put at the purchase strike? Okay, Sean, you're talking about the wheel strategy, a cash secured put. Yeah, I understand it. Yeah, I know it. But what you're missing, and this is not the first time you've done this, okay, I created the trading strategy for my 9-year-old daughter. That's the trading strategy I'm sharing with you. Now, in my morning trading group, that is a paid service, yeah, we do a lot of other trading strategies. But here, for free, I teach one and only one. Okay, and if 50% a year is not enough for you, I can't help you out. Okay, so next, put skew often juicer. Okay, Sean. If the underlying falls 10%, where do you sell the next call? At a new level, sometimes it whipshaws. Yeah, I get that. ICT is the best. You've been shorting? No, I got one short and I didn't do it on purpose. It was a tail end of a calendar spread. Okay, so calendar spread went the wrong way. Somebody exercised it and I ended up shorting. Anyway, ICT. What the heck is ICT? ICT. No options. No, thank you. So you weren't listening when I said weekly options only. How did you do options if the account started at 1,000? Okay, Alice, you weren't paying attention. Wrong one. Okay, weekly trades 2025. Okay, Alice, Account number 1, 152,000. Account number 2, 143,000. Account number 3, 114,000. Okay. Now, yeah, I started back in 2011 with the blog post. Okay, so I started in 2011 with the blog post. Now I've worked up to the live show, which is here. And don't ask me why I came up with this gray and the white letters. It's supposed to be black with white letters. I don't know why. Oh, what about GME? What about GME? Isn't that GameStop? GME. It is GameStop. Okay. What about GameStop? Well, let's take a look. How often have they increased their dividends? GME. Now, when I say consistently profitable, I want to be able to, number one, either read the quarterly reports or the annual reports, or better yet, go right to the historical data and see how consistently they increase their dividends. Because if a dividend is a portion of the profits they share, well, if the dividend gets higher, the profits get higher. It just doesn't work any other way. Dividends only. Okay, so here's your answer for GameStop, GME. There are no dividends in the selected time frame. So you come to a dividend investing channel and then you give me a stock that has no dividends. Explain that to me in a manner in which I'll understand. Now, I didn't go to college. I don't mind. You know, I did do the service and I did open up my own manufacturing company. So I bypassed the college thing, so I'm not as smart as everyone else. But explain to me in a manner which I'll understand. A stock that has no dividends, what is it doing on a dividend investing channel? Kind of curious. Antoine, you've been here long enough. You should have known not to throw up GameStop. Wait, where do you sell the next call in a downturn? Well, we just talked about that 5 minutes ago. Okay? Take a look at US Steel. Okay? Here's US Steel right here. Okay, now I'm into US Steel at 41. Right? Now it's at 37. Well, this week I sold the 39s. Because I don't think it's going to go above 39 between now and Friday. Because it's in a little bit of a downturn. See, she shot up, she pulled back, she went up, now she's coming back down again, and she's going to keep coming down until she stops, which my assumption will be somewhere around the $36 area before she turns around and goes back up again. So I bought it at 41, and I'm selling the 39th, which is $2 less than what I paid for it. Okay, so same thing with Kohl's. I'm into Kohl's at 22. Okay, I'm into Kohl's at 22, which is way the hell up here. But this week, I'm selling the 13s. It's far enough away, but the 13s are giving me 23 cents a share, which is 1%. Because remember, I'm into it at 22. Okay, I'm into it at 22, and now it's at 13. No, wait a minute. Now it's at 11. So I'm selling the 13s. Because it's far enough away, I don't think it's going to hit it this week. Okay, if it does hit it this week, I'll just push it out until next week and do the same thing. And I'll just keep moving it forward so I don't ever sell for less than I paid for it. There's a strategy for getting around that. That's why people pay me to watch what I do and to answer the questions for them. All right, so that's your answer. Okay, I'm into it at 22. Okay, you're looking at 14 right here. That's 14.50, that's 14, 13.50, 13, 12.50, 12, 11.50. Here's where we are right now, 11.37. Well, that's a 50% drop from where I bought it. But am I panicking? No, because I'm okay with owning Kohl's at 22. Because every single week I get between 1 and 2% from Kohl's, even selling an option less than what I'm into it for. But I look at it twice a day, once in the morning and once at night with you guys. So I have a good understanding where my money is at all times. Holy shit. We're going to reboot on TikTok. That's crazy. I've never been down to 27 before. Antoine, you should know better than that. That's what's messed up about the buy right strategy. Well, I wouldn't say that at all. Okay, Sean, I'm still making my 1% every week. Okay, so I really don't care how far the stock drops. If it is a good company, there are people that want to buy those options. And if they buy those options and I make my 1%, where's the issue? Okay, so here's a question for you, Sean. If I buy at 14.50, which is the high right here, all right, do I qualify for the dividend? The answer is yes. If I buy down here, 11.37, do I qualify for the dividend? The answer is yes. Is there any difference in the dividend that I collect at 14 and the dividend you collect at 11.37? The answer is no. Because people never bought stocks to collect weekly money from selling options. They bought stocks to collect the dividend every 90 days. Okay, this is something new. Nobody's ever really, at least I've never seen anybody do this before. Okay, now I've been trading for over 20 years. And I've seen a lot of stuff come and I've seen a lot of stuff go. Okay, I'm just looking for 1% a week. It's not that difficult. And I don't really care if I'm in it at 22 and now it's at 11, but I'm still getting 1% every week from it. Okay, that's a 50% per year return just on Kohl's. All right, let's keep on going. Pretty harsh. Sorry, I'm in a rare mood today. You are selling a covered call below your break even and you roll to avoid the shares being taken away. Well, yeah, that kind of makes sense, doesn't it? Okay, why would you buy something? Why would you invest your money? Well, I know the reason. People invest their money to make money. Well, they invest to collect dividends and they invest to get capital appreciation. Most people that are retired buy a good dividend stock and rely on just the dividends. They don't really care where the stock price is. So whether you bought it at 11 or whether you bought it at 211, you still get the exact same dividend as everyone else. You're not buying shares, you're buying the dividend. You're buying a rate of return. So if I put $100,000 in at 14, well, I'm getting X amount of dividends every single week or every single quarter. The same thing is here at 11.37. Still the exact same dividend. It's just a different stock price. Okay, it's cash flow that I'm buying. I'm not buying the stock for the stock. I'm buying it for the cash flow. And as soon as that cow rolls out the pasture, I will get rid of it and go into someone else. All right, I'm going to reboot on TikTok. You guys down to 30. That's freaking crazy. I've never seen it that low before. All right, I'm turning it off. I'm rebooting. So you guys sit around, hang out, come back. So you guys on YouTube, hold up a second. Let's do this one more time. Go live, and hopefully it gets a little bit better. All right, there we go. And let's do this. Let's do that. And hopefully we get a better audience. 30? Really? I'm used to 100, 200 people every single night. I have no idea what the hell's going on here. All right, free speech. You are selling, yep, Sean Grady. In your Kohl's example, you need to sell it for 50 weeks to break even. And one of those 50, it will rally and cost you a lot. Just saying. Sean, I appreciate your concern. Okay, but I've been doing this for 20 years. I'm not really worried about it. To be totally honest with you, I'm not really worried about it. Okay, when I start to worry, then you can say I told you so. But at this moment in time, I have no intention whatsoever of selling it for less than I paid for it. And if I'm getting 1 to 2 to 3% every single week, why would I get rid of it? Okay? Hey, so 1% every single week is over 50% per year. And I'm okay with that. Okay? And Kohl's has been in business for more than 5 or 10 years. So I think it might be around for another 2, 3, 4, 5, 10, 15 years. And who knows? I might just get out of Kohl's and jump into something else. I'm not worried about it. But I'm thankful for your concern. Thank you. All right, let's keep on keeping on. What else do I have on my list? GLW, which is Corning. GLW. Interesting. Another drop. I haven't seen a single stock that gone up today. Did everything go down today? I'm just kind of curious. Okay, 30 days ago, here we are. Shoots up, pulls back. Going to find the bottom for Corning also. Lucid, LCID. Lucid. Well, Lucid had an update today, but Lucid's at $2. You see that? 30 days ago, we're at $2.80. We shoot up to $3.60, but now we're down to $2.10. Well, at $2.10, does it make sense? $2.23. The 250s are going for 4. Well, that's more than 1%. The 3's not worth it. I wouldn't do Lucid anyway. Somebody asked me about it, so I'm just looking at it. Look at the numbers. Look at that big drop. It goes from 360 down to 210. Eventually, they're going to find a bottom, turn around, and go up. That should be a nice rally for that one. So let's keep on going. That was Lucid. Nike. Nike, NKE. Down also. Good evening, good evening. Really, 32, 33? What is going on with TikTok lately? Ever since that ban in January, TikTok has been totally messed up. The numbers are just absolutely horrible. Oh, Golden Law Group. Walgreens went up today. We're going to take a look at Walgreens next. Okay, so Nike, look at this. 30-day bottom, 30-day top. She come down. So once she comes down to about here in another couple of days, she can turn around, go back up. That's when I'll take a look at Nike. Somebody want to take a look at Walgreens. Free speech. Do you a stock price minimum? Okay. $5 or $10. I don't like to go to less than $5. Okay, because there's a few of them I'll trade in the $5 and $10 area. But for the most part, I like to stay between, let's say, $20 and $200. That's about it. Thanks. You're welcome. Okay, so somebody over on TikTok wants to take a look at Walgreens, WBA. Holy shit. There's one that went up today. Jaden, yes, we do options. We're actually going to do some Jaden, I'm going to do an example right here on Walgreens. Sit tight and let's take a look at the chart. Number one, a year ago we're at 22. The bottom of the year is $8. So from $8 to 22, that's more than a 50% drop. You're worried about stocks going down? This one already did it. Do you think it's going to go down any further? I don't know. Walgreens has been around for 170 years. There's 7,800 stores worldwide. Or is it 8,700? I think it's 8,700. There's a lot of stores worldwide with Walgreens. Almost every major city has a Walgreens. Now, yes, they've had some issues with theft, and that's going to be a problem. Wait a second. Yeah, Jaden, we're doing options right now. Austin, what's happening? So let's actually take a close look at Walgreens, because I do have some Walgreens, just in case you were wondering. Caden, how often do you stream? Every day, every weekday. It looks like you know what you're doing. Thank you, Caden. All right, so let's take a look at Walgreens. There's the high, here's the low. Look at the last 90 days. The last 90 days is the last 3 months. Same thing. We're looking for this. Every time I look at the chart, I'm looking for the same 5 things. 5. High, low, where was it? Where is it? And what's the direction? Sideways, up, down, up, down. That's where we are right now. Does it make sense to jump into that? Well, let's take a closer look. The 90-day high is right here, 1327. Well, the last 30 days, this is what we're looking at. 30 days ago, we're at $9.80. We dropped all the way down to $9, shoot up to $11.80, drop down again, and now we're going back to the upside. 1084, the closest strike price is going to be the 11. Does it make sense to buy it? Well, let's check a look. Okay, let's take a look at Walgreens at 11. Okay, going to change that to covered stock. The 11 right there. One contract at the market. Here we go. All right. Buy one covered call, Walgreens, WBA, weeklies. 14 March 25. That means the option expires next Friday. The $11 call option against the stock at the market to open. That's the order right there in green. Okay, my maximum profit, 38. The break even, 1062. Well, the stock right now is at 1108, but the break even is 1062. So as long as this thing is above 1062 come Friday, I have a profit. How much? Well, that's going to depend on how much over 1062 it's going to be. If it's above 11, well, I make 38 bucks per contract. Well, how much is one contract? Well, let's get the calculator out and check it out. Calculator, here we go. Clear. Profit, 38 bucks. Okay, right there, see, maximum profit. Maximum profit, $38 per contract. One contract, 38 bucks. Two contracts, 38 and 38. What is that? 76. All right. How much is it costing? One contract, 1,062. 106. Whoops. Divided by 1062. A grand total of 3.5%. That's a hell of a lot more than 1%. 3.5 is more than 1. Now, every once in a while, I will, actually just about every single week, I will get a stock that gives me a 3 or 4% return every single week. However, I don't put all my money into one stock. So if I have 6 different positions, one gets me 3 or 4%, one gets me 0.5%, one gets me 0.25%, one gets me 1%, one gets me 2%. You average it out, it comes to a little over 1% every single week. That's my goal, 1% every single week. Okay, next. Tim Lee wants to take a look at Ford. Why not do 20% ODT easy money? Okay, Jaden and I don't do ODT. Sorry. 0 days to expiration. Okay, the consistency is not what I would like it to be. Until someone comes up with a trading strategy for the ODT, yeah, then I would do it. Okay, so Tim Lee wants to take a look at Ford. Now, I do own some Ford, just to let you know, just in case you're wondering. Okay, back to the beginning, and some Ford. And Ford made a new bottom today. Okay, a new bottom for Ford. Okay, what is the actual bottom today? 906. $9.06 per share is the low today for Ford. Okay, not a great time to buy it. I personally would wait until it turns around. Now, tomorrow, more than likely, it should be higher because Ford hasn't been this low in a long time. And it's Ford. It's 100 years old. They've been around. They've seen a lot of crap. Okay, so currently it's at 935. The 935s are going for 14 cents a share. Okay, so if I buy it first thing in the morning, I sell somebody the rights to buy it from me for the exact same price, 935, I can pick up 14 cents. Now, 14 cents on a $9 stock is over 1%, like 1 1/4. 1 1/4 is probably around 70%, 75% per year. That's not that bad. And it's Ford. Okay, it's over 100 years old. Okay, I don't think Ford's going to go bankrupt. But I am required to tell you there is a chance that it could. Okay, investing has risks. You have to be okay with playing this game. Jaden, 1 to 5% weekly. Yeah, but Jaden and I average 1% per week. Now, every once in a while, I will get a trade that's 2 or 3% in 1 week. But average, it's around 1%. Okay, let's go Mets. Cigna. Isn't that CIG? CIG? No. Oh, CI. There it is. Cigna. Okay. Interesting. Well, I'm going to say no to Cigna for a couple of reasons. Here's reason number one. Okay. It's actually at the 30-day high. Okay. It actually went up today. Okay. The high of the day today. Okay. That's the 30-day high. I don't do 30-day high because when you're buying a stock, you make most of your money buying low and then selling high. Okay. Not buying high and waiting for it to go higher. Yeah. No. AWR. Isn't that American Water? AWR? Isn't that a monthly? Yeah. American States Water. It's a monthly optionable stock. Now, it is a dividend king. Okay, they have increased their dividends for over 5 decades. It's a great company if you're okay with 12 to 24% per year. That doesn't work for me. I want 50 to 100% per year. Sorry, that's just me. Okay, but American States Water, Luigi. Okay, it's a monthly. You've been here before, Luigi. You know that I don't do monthlies. All right, so next on the list, Tractor Supply, TSCO, TSCO. Interesting. Not quite sure. Look at where she is. 30 days ago, we're down here. We shoot up, there's the high, she comes down. Now she's just going sideways. Okay, now everything else is down today, but not this. This seems to be just in the same space it was yesterday, the day before, and the day before. Okay, so what does that mean? Do you like Tractor Supply? Now here's something we haven't looked at all today. Let's move this out of the way. Next, we're going to take a look at what's called the seasonality chart. Now, for those who've never seen the seasonality chart, it is basically a one-year chart going out to the left, January 1st, to the right, December 31st. This is the whole year. The blue line up here represents the movement for this year. January, February, now this blue dot right here, that's today. Okay, what does it usually do this time of year? Look at it, nice upward trend. How can you argue with that? So you go to where the little blue dot is, that's today. Click left, drag right. As soon as it lights up, that's about 3 weeks. So look at the movement for Tractor Supply in the next month. Nice upward trend. Perfect for covered calls, perfect for spreads. If you like Tractor Supply. And it always comes down to that. Do you like this company? Do you like it at this price? Who are you talking to? A hotel conference room? Scott Little, how are you today? Ticker AI, please. Ticker AI. Ticker AI. Why are we looking at ticker AI? Okay, turn that off. Let's move this back this way. AI. AI. Okay. It's in a big downfall. Okay, explain to me why this looks inviting. Okay, it's just going down, 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 down. Now, as soon as it finds the bottom, turns around, goes up, then maybe, if it has good dividends. Well, let's see. How often has this company increased its dividends, and does it even have any dividends? AI. Wait, give it a minute. Yahoo Finance, $22. There are no dividends in the time period. Okay, no dividends. So why are we looking at it? Scott Little, hello. Who am I talking to? No, Scott Little, I'm not talking to a hotel conference room. I'm talking to you guys. Okay, now, Scott, just in case you didn't know, I got a TikTok channel over there. I got a YouTube channel right here. I got another TikTok channel right there. An Instagram channel right there. Facebook channel over there. Another YouTube channel down here. A Rumble channel down here. And a Twitch channel down here. So I got a lot of channels I'm talking to. Norberto, ¿qué pasa, amigo? Pepsi, huh? Well, let's take a look at Pepsi for Roberto. PEP. Interesting. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down, up. 154.98. The closest strike price is going to be the 155. You can't get very much closer to 155 than 154.98. Well, the 155 is going for 142 to 187. That's right around 1%. That works. Okay, so let's look at it this way. A year ago, we're at 165. The high of the year, 183.50. The bottom of the year was in Elvis's birthday, 141.51. Now, look at the last 90 days. Okay, the high, the low, where was it? Where is it? Look at this, down, up, down, up. Okay, so she's going to the upside now. Great. That's good for the 90-day time frame. What does it look like for the 30-day time frame? Well, 30 days looks a little bit like this. Okay, now it's not so appealing. 30 days ago, we're at 146. Well, now we're at 160. Now it's time for profit taking, not time for buying. But that's just my humble opinion, because she had a bottom at 142. Okay, 160, that's 18. That's $18 increase, which is about a 12% increase from the 17th to today. 12%. Yeah, that's going to be profit taking more than likely. Not guaranteed, but more than likely. Turbo. What are my thoughts on QDTE? QDTE. No. Now, the reason why Turbo is it's a monthly option. 21 March, 17 April, 20 June, 19 September. That means I can only do an option trade once a month. That just doesn't work for me. I want once a week. So, no. Norberto, the 35 and the 15 EMA have divergence. Okay. Now, when I say I created this strategy for my 9-year-old daughter, you're expecting me to say that I taught her about the moving averages? No, I did not. I did not teach her about the Greeks. I did not teach her about the deltas. I did not teach her about implied volatility. I told her, if it hits a bottom and then turns around, goes back up, and it looks like it's going to the upside and everything makes sense along with the numbers, then it's a yes. But other than that, no. I really like CLS calls and LEU calls for July. Okay, Norberto, I don't buy calls. I sell them. Now, the reason why I sell them is because 80% of all options expire worthless. So I'm not a buyer of options. I am a seller of options. So when you buy your options, you buy them from somebody like me. And I'm counting on them to go down or to go up and take my stocks away. That's what I'm counting on. Okay, I'm not buying stock options because too many of them go belly up. So no. All right, no more suggestions. So let's go back to my list. Dell. Ooh, I like Dell. Okay, Dell, as along with everything else, is down at a 30-day bottom today. Yeah, no to Dell. No, I don't have any. Do I do iron condors? Norberto, I do not do iron condors. I do one trading strategy here and only one. It's a simple, safe, predictable, and consistent strategy. Okay, I'm retired. I have no desire to go back to work. And an iron condor, I don't want the time and effort to do one of those. Sorry. All right, next. Procter & Gamble. Interesting. Okay, unfortunately, Procter & Gamble's at the high of the year, 180. I don't buy at the high of the year, and I don't buy as it's falling. You're a swing trader? Cool beans. And here and there, I do day trades. Alrighty then. Yeah, I don't day trade. Sorry. I'm more of a weekly trader, but I also invest in stock trades. Alrighty then, Roberto. Cool beans. Keeping it rolling, keeping it reeling. Okay, nothing wrong with that at all. Nice to see that you're active. Next, we're going to be taking a look at Angie. She came and she went. Procter & Gamble, Caterpillar. Look at that. 1, 2, 3, 4, 5. 5 weeks going down. Caterpillar is going to turn around and make a nice rally pretty soon. Okay? From 410 to 320. That's a $90 drop. That's a 20% drop. That's a lot. Can you check ARM? Okay. ARM. Interesting. ARM Holdings. All right. What am I looking for here? Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, down, up, down. 122. We got 1, 2, 3. We're on week number 4 of going down on ARM. Do you like it? 125. The 125s are going for 430. Yeah, with a high premium like that, that's over 3%. I'm guessing this thing doesn't have dividends. ARM. Well, let's check. Okay, ARM Holdings, no dividends. Imagine that. Okay? Yeah, with no dividends, they got to give you that high premium because you're not getting a dividend. It's in demand. Okay. Now, Norberto, there's nothing wrong with it whatsoever. You like it, I wish you the best of luck with it. It's not a dividend stock. I don't buy stocks unless they have dividends. And 2 decades, that's 20 years of consistent profits. Okay, where I invest my money, I have no desire to go back to work. Okay, I'm 61, no desire to go back to work. I could, but no desire. AMZY. What the heck is AMZY? Well, let's check it out. AMZY. AMZ. Yeah, no, I don't do monthlies. The numbers just aren't there. HBAR. HBAR. Can't find that symbol. I guess that's a no. AMZY. Jesse, we already looked at AMZY. It was a no because I don't do monthlies. The numbers just don't work. Look at the 5-year ARM. Yeah. Norberto. 5 years? No. 5 days. Okay. 5 days is what I'm looking for. Abbott Labs. ABT. Yeah. Not at the high of the year, dude. Okay. The high of the year? Yeah, no thanks. What type of work did you do your working years? Luigi, believe it or not, I owned a manufacturing company. I used to be a CEO. Can you imagine that? Me having employees? I was told I could be a pain in the ass. Okay? But here's the thing. 90% of all my employees were females. Because funny thing about females and working, they can work and talk at the same time. Guys, nope. You start talking to a guy, they got to stop what they're doing and pay attention to what you're saying. They can't multitask. SPGI. Okay, Norberto, I can tell you no right now. SPGI. Okay. So SP Global. SPGI. Now, I'm over on Yahoo Finance looking at the financials on SPG. Okay, let's look at all the dividends. Oh, 1973. All right, well, I'll go back all the way to 2005. All right, 2005, you ready? Here we go. 2005, 17. 18, 21, 22, 23, 24, 25, 26, 28, 30, 33, 36, 41, 50, 57, 67, 77, 85, 90, 91, 96. Holy shit. SPGI. Why didn't I ever hear of SPGI? Hold on. Okay. 516. Okay. Only problem with this one, Roberto, here's the high of the year. You got your profit taking already taking place. So yeah, it's going to be more profit taking before it's time to jump in. Yep, finally. Yeah, that's one that actually looks good. But $500 a share, a little out of my price range. As a compound portfolio. Yeah. You believe it? I'm actually thinking of creating another manufacturing company. Not 100% sure if I want to do it or not. It might be just part-time. Also, with these three. OLZ. What is OLZ? OLZ. Yeah, I'm going to say no to OLZ. SKYY. SKYY. Yeah, no. Okay, SKYY, monthly. The numbers just don't work for monthlies, dude. CLOU. CLOU. Yep, no to that one also. 21 March, 17 April, 20 June, 19 September. Those are monthlies. Okay? Monthlies only pay between 12 and 24% per year. Doesn't really work for me. Okay, thoughts on MSTY, Misty. Let's go right here to Yahoo Finance. MSTY. Okay, so who came up with MSTY? No name there. That's not figure. No name. Take a look at the dividends. April 4th, 2024. That was the first dividend. This is not even a year old yet. So, no. Eric, how are you doing, Eric? So, Eric, when I say I'm looking for simple, safe, predictable, and consistent, okay, when I say consistent, I'm looking for 2 decades. That's 20 years. This thing is not even 2 years old yet. The very first dividend, April 4th, 2024. Okay? And look at the dividends. 413, 250. That's almost a 45% drop. Then it goes to 303, then it goes to 233, then it goes to 194, then 185, 420, 442. That's no consistency whatsoever. That's all over the place. Now, some people may be okay with that, but not me. It pays off based on how volatile MicroStrategy is for the short run. It is great. Yeah, I get it. We are entering an energy cycle. Not quite sure, Salt and Pepper, what you mean by that, but how are you doing this evening? First time you're here, I remember that name. Salt and Pepper 89. Matthew, can't read the screen. What's the ticker? Thanks, you're welcome. EPR, Norberto, EPR. What the heck is EPR? EPR. No. That was quick, wasn't it? Did you see that? See how quick that was? Monthlies just don't work. Now, the reason why I say that, look at where we are, 52.95. So we're going to be looking at the 53s. All right? This one doesn't have a 53. It has a 50, but look at the price, 52.95. So more than likely, I'm going to be buying it at 53. It doesn't have a 53. It's got a 50 and a 55. So if I sell it at 50, I'm losing $3. That means I'm losing money. That's no. And if I do the 55s, I'm making 30 cents. That's not even 1% for a month. No, the numbers just don't work. And then what makes things even worse is take a look at this. That is 30 days. See it? 1, 2, 3, 4 weeks, 30 days. Great. Now tell me where it's going to be in another 30 days. Because if you're doing a 30-day or a monthly option, it's 30 days every 30 days. So great. Tell me where it's going to be. It's got 1, 2, 3, 4 weeks to the upside. You think it's going to go 8 weeks to the upside? I don't think so. It'll be profit taking. What do I think about MRNY? MRNY. No. 70 by July. You're going to be 70 by July? Roberto, good for you. Sorry, MRNY doesn't make it for me. Look at the big drop, number one, and it's at the low of the year. Okay, and it has monthlies. Monthlies just don't work. Not for me anyway. EOSE. I never even heard of that. EOSE. Interesting. Okay. Let's get rid of this one. All right, EOSE, Energy Enterprise. Well, how are they with their dividends? EOSE. Well, we'll take a look. Hold on a second there, Jay. Okay, Jay, I'm curious, Jay. There are no dividends in the selected time period. So, Jay, you came to a dividend investing show, okay? Dividend investing for weekly cash flow, right? The very first word, dividend investing for weekly cash flow. So I understand how the second half can be confusing, but the first half, dividend investing, okay, this thing has no dividends. Why would you even ask? I'm kind of curious, you know? Okay, so we're looking for dividend stocks, Jay. EOSE is not a dividend stock. All right, so let's take a look at a few more. Let's get rid of this one. Paramount, P-A-R-A. Now, in case you guys were wondering, Paramount is, holy shit, this is one that actually works. Look at it. Perfect. It's about freaking time we find one that's a yes. Paramount, P-A-R-A, is on Warren Buffett's list, just in case you were wondering. Okay, so let's take a gander. Here's the high of the year. Okay, high of the year, the low of the year. Where was it? Where is it? Look at the movement. Up, down, up. 1168. The closest one is going to be the 1150, and that's selling for 20 cents a share. That is going to be over 1%. So let's take a closer look. All right, so a year ago, we're at 1052. The high of the year was back in the beginning of May, and that was 1458. The bottom of the year was in the middle of June at 959. She basically just went sideways for the rest of the year. Look at the last 90 days. Okay, the last 90 days are the last 3 months. Here's the high. Here's the low. That's where it was. This is where it is. Let's take a look at the last 30 days. Well, wait a minute. Look at the pattern. You should be able to see that relatively easy. Okay, up, down, up, down, up, down, up, down, up. Okay, she's going up right now. That's the 90-day time frame, the last 3 months. I want to look at the last 30 days. The last 30 days gives me a better idea of what she's going to do next. Okay? 30 days ago, there's our bottom. Here's our top. She pulls back, goes back up. 3 days to the upside. That works for me. Okay, 1148. The 1150 is going to be the one we're looking for right there. Okay, so let's get rid of this one. Let's change this to a covered call, because it's covered. A covered call is the simplest strategy there is. The 1150s right there. We want to look at just one contract at the market to open. And here it is. Here's Johnny. Buy one covered call Paramount 100 14 March 25. Well, this option is going to expire next Friday. Okay. So the 1150, because right now it's going for 1168. Paramount at the market to open. $26 is what the profit going to be here. That doesn't sound right. Okay, clear that. $26 right there. See it? Right there. Maximum profit. $26. I can turn my fan up a little bit. Off. High. Medium. All right, that'll work. All right. 26. How much is the trade costing? Cost of the trade, including commissions and fees, $1,124 divided by 1,124 gives me a rate of return of 2.3%. That's how you figure out what your profit is. You take the profit or the rate of return. You take the profit and you divide it by the investment. Okay? So 2.3% for this particular trade, Paramount. Now, Paramount, P-A-R-A, is on Warren Buffett's list. Not on my list. It's on Warren Buffett's list. So if it's good enough for a Warren, it's good enough for me. Hey, Ruben, I'd like to know how the hell you do that, but okay. E-Rose, we'll take a look at EBR. Oasis, ABR, what the heck is that? All right, I'm going to put Paramount down. P-A-R-A. All right. Get rid of this. Get rid of that. Get rid of this. Go over to here. Get rid of that. And here we are. All right. That being said, Oasis wants to look at ABR. ABR. Isn't that Arbor? Arbor Realty. Okay. Interesting. Take a look. High, low. Where was it? Where is it? Look at the movement. Up, down, up, down, up, down. Here we are right here. 1240 to 1250s. $3, 3 cents to 15. Not that great. I'm going to say no to this one. Look at the premiums. Okay, if you're right, good. But if you're wrong, there's nothing there. Okay, now if the stock goes down, you're not going to collect anything. So no. There's a few stocks that look like this. Okay, you got a decent price at the money. One strikeout, it's adequate. But 2 strikes, no. 3, worse. And then nothing. Yeah, no. Always take a look at the numbers. Gives you a good idea what's going on. Sorry about that one, kiddo. Wayne, PM, Philip Morris. No, sorry. Now, the only reason I'm saying no to Philip Morris for this week, it's at the high of the year. I never buy anything at the high of the year. That's the time to sell, not the time to buy, in my humble opinion. Okay? So let's keep on going. Wayne, thank you for that. Ruben, interesting. Like to know how you do that, but all right. Yuga I-10, MPW. Now, MPW is on my list. MPW. And I do have some MPW, but it's not time to buy MPW. Okay, look at that. The high of the week, the 30-day time frame was yesterday. Today she pulled back a little bit. Now, I personally going to wait for MPW to come all the way back down here under 5 before I jump back into it. All right, so that's everything from you guys. So what are we looking at next? Walmart we looked at, Nike we looked at, Walgreens we looked at. Ooh, Riot. We haven't looked at Riot yet. R-I-O-T. Okay, I do have some Riot, and look at that. It is down, 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 down. No to Riot. All right. Sandy Sand, how are you today? NVO. Now, Sandy, this is the first time you're here. Okay? NVO. Interesting. Why are we looking at this? NVO. Let's see how wonderful they are. their dividends. Are they increasing? Are they decreasing? Oh, the numbers don't look that good. Okay, they only pay once a year. That's not that good. Okay, 2005, 4, 5, 6, 9, 10, 14, 18, 25, 32, 42. Nice, all the way up to 2014. Uh-oh, it goes from 42 to 38. That's about a 9% decrease. 48 to 22, that's a 50% decrease, more than 50%. All right, check this out. You ready? March 18th, 2016. It's from 48 down to 22. That's like a 50% drop. Then it jumps to 33. That's a 50% increase. Then it drops to 24. That's a 33% decrease. Then it jumps to 34. That's 10, that's 50, 45, 40% increase. Yeah, all over the place. Up, down, up, down. No, thank you. Sorry, kiddo. I don't know who came up with that one. Sandy Sand. Yeah, the dividends are all over the place. No consistency whatsoever. Okay, so you're new here. What I'm looking for are companies that are consistently profitable. Okay, NVO, I've never heard of them. That's probably why, because the dividends are all over the place. No consistency and profitability. UGAR wants to take a look at ARC, A-R-C-C. A-R-C-C. No. Now, UGAR, you're relatively new. I don't do monthly options. 21 March, 17 April, 20 June, 19 September, 16 January, 15 January. Yeah, those are monthlies. The numbers just don't work. Joe Berman wants to take a look at advanced auto parts. Now, I do have some advanced auto parts, and youch, that don't look good, because I have advanced auto parts at 44. All righty, so let's take a look. All right, so here's the thing with advanced auto parts. We knew the earnings report was coming out. So here, last Tuesday, I jumped in at 44. Okay, and I got like a 23%. Okay, check this out. I got a nice fat premium on Tuesday. Wednesday, the premium dropped by 95%. So I bought it back. And I sold the next one. Picked up another 3 or 4%. It dropped more. I picked that one up. I turned and I rotated that one, and I picked up some more. So within a week and a half, I've already picked up 4 premiums on just this one stock after that big drop. All right, is what it is. UGAR, BAM, really? B-A-M, B-A-M. Okay, UGAR, I do appreciate the interaction, I do. If it doesn't have weekly options, it's automatically a no. Okay, I don't do monthly options. If it has no dividends, it's a no. If it has no weekly options, it's a no. Okay? It's simple. S-A-N. What is S-A-N? Santander. Monthly. Didn't I just finish telling someone else I don't do monthlies because they just don't work? Brad. P-O-U. It's probably another one that's going to be a no. No options at all. No. Okay, if it doesn't have weekly options, it's going to be a no. Plain and simple. All righty? So let's keep on looking at what we're looking at. Next on the list, Ally, A-L-L-Y. Ally Bank. Big old drop. No. What happened there? Look at that. Okay, there's going to be some good buying opportunities in the next couple of days, because as soon as all these stocks find their bottom and shoot up, yeah, that is going to be lovely. UGAR wants to take a look at ConocoPhillips. What's a good industry to have exposure in right now? Baguetta, how are you two? Bogota? Bogota. Okay. Hold on a second. How is it that you are not pulling your hair out with all the people asking you to look up stocks without dividends? Because I'm getting old and my hair is receding, so I want to keep what I have. How's that for an answer? Coin. Okay, Logan, Coin is not a dividend stock. That's a no right off the top. So UGAR, COP, huh? ConocoPhillips. Here you go. Now, ConocoPhillips is on my list. Unfortunately, look at the last 30 days. We've got 1, 2, 3, 4, 5, 6, 7 weeks going down. This thing's going to turn around and jump up really nicely when it does. Okay? Now we're rapidly advancing on 9:30, 15 more minutes. You guys got to give me something good. All right, next on my list. Oh, that's it. Let's take a look at next week's list. mRNA. mRNA. Interesting. Dancing Banana. How are you today? DHT. What the heck is DHT? Come on, dude. Really? Really? Yugar? I don't do monthlies. Okay, see, I got 5 simple rules. Rule number 1, never buy something you do not understand. So, Yugar, you're actually asking me to take a look at stocks that you don't understand. And the reason why I'm saying that, because when I say no monthly options, this is like the 3rd or 4th one you showed me with monthly option. Okay, just because you say it doesn't mean it is something I'm going to like. Okay, just because you put it up there. I don't like stocks that do not have weekly options. So it's 20 years. I get 2 criteria. 20 years of consistent profitability. That's one. Second, weekly options. Consistently profitable, weekly options. That's it, just 2 criteria. Thank you for everything you do. Yuga, you're welcome. James, Florida, FL, if you don't mind, I have it. Foot Locker, I've got Foot Locker also, Stephanie. Stephanie Cummings, how are you tonight? Let's take a look at some Foot Locker. Now, I do have some Foot Locker, like I said, and today it's low again. Did we do Microsoft? Not yet, but we will. Now, I was kind of hopeful yesterday because Foot Locker, I thought Foot Locker found its bottom last Friday, and I thought Monday was going to be up day. Great. Well, it went up Monday. What happened today? She came back down again, making a new 30-day bottom on Foot Locker. Sorry. Great and thanks. You're welcome. Now, I do have Foot Locker on like 2 or 3 different accounts, and this does not make me a happy camper at all. But I have no intention in selling it until it returns back to where I first bought it. Do it. Let's look at Microsoft MSFT. Oh, no. That's terrible. Look at that. She goes from 450 all the way down to 380. Okay? She drops, goes sideways, drops again, making a new 30-day bottom for Microsoft. Sorry. Ooh, Bogota wants to take a look at Mara, M-A-R-A. Now, I do own some Mara, and the numbers actually don't look that bad for the last 30 days. Okay? Here's our high at 21. Here's our bottom at 12, almost a 50% drop. And then she goes 1, 2, 3, 4, 5 days to the upside. All right, well, that works. Let's take a look at what does seasonality look like for this. Why did you say no to Dell? Okay, free speech. Hold on, we'll take a look at that in a second, as soon as we look at Mara. Now, Mara, this time of year, seasonality looks something like this. Okay, right click, left click, drag right. Okay, here's where we are now. Whoops, right there. Okay, so it looks. Yugar, we already looked at T. Rowe Price earlier today. Bogota, we're looking at Mara right now. And Saluski Swimmer. Okay, Halliburton, we'll look at that one next. What companies are going to drop after this speech? I have no idea. Okay, Ricky, we already looked at Misty. Misty's a no. But take a look at Mara. Here we are right here. Okay, she's going to drop a little bit and then a nice run up. So maybe on Friday would be a good time to jump in. But look at where we are at the moment. Okay, look at where we are right now. Here's the 30-day high. Here's the 30-day bottom right there. Now she's going up. Well, you can't get any lower than right here at 12 because that's the low of the 30-day time frame. And that's what we're looking at right now. This is where we are. Where do you think it's going to go next? Well, more than likely it's going to go up. Does it make sense? Well, at this moment in time, the 14s are going for $1. That's a big jump. That's a lot of money. 14. That's almost what, 8%? Tutopi, I did not understand the options. When buying the contract, the writer speculates during the contract period and after closing the contract. Okay, Tutopi, I'm not quite sure what you're talking about here, but here's an idea. Number one, I don't buy options. I'm a seller. I sell options. Okay, basically what that means is that I like to have the odds and probabilities in my favor. If 80% of all options expire worthless, why do I want to buy them? I mean, think of it. Look at the statistics. This is not me saying, okay? Look at the statistics. How many stock options expire worthless? You'll find about 80%. So why would you want to be there? Does Mara have dividends? No, Mara does not have dividends. But Mara is on Warren Buffett's list. That's why it's on my list, okay? Okay, so free speech and other stuff wants to know why we said no to Dell. D-E-L-L. Okay, that's why right there. 30-day high, 30-day bottom, right there. Now, Dell, I like Dell. Dell is on my list, and as soon as she turns around, which could be tomorrow, Wednesday, or Thursday, or Friday. So Dell will be on my list for next week, okay, because I need something to buy next week. How do you get the options you sell? I'm not 100% sure what you mean, how do I get the options I sell? The options are available right here, okay? So if you buy the stock and you own the stock, well, you have the right to sell it to somebody else. Well, if I buy this stock right here at 96, because that's the current price, I can sell it to someone else at 97, okay? And then that is going for $2.07, which is over 2%. But that's Dell, if you like Dell. Okay, so Armani, you actually have to qualify to buy and sell options. Okay, they're not just available to anyone, and it's easy to qualify. Not many people have a problem with that. All right, so Tutopia, I don't understand the options. I don't understand what you mean by you don't understand them. Okay, so here's an idea with the options. Let's say you own a car, 69 Camaro. It's sitting in the backyard. You push out in the front lawn and you put a for sale sign on it, $10,000. Okay, not bad for a 69 Camaro. So Tommy down the street comes by and says, "Hey, I like your car. Take $1,000, hold it for me until Friday." So if Friday comes, he comes back and buys that car from you, he gives you the $10,000. If he doesn't come by back on Friday to pick it up, you get to keep that $1,000 and then sell the car to someone else the next week. So, but it's the same thing. Okay, we're buying a stock at a certain price. So now I own it at a certain price. Now that I own it, I have the right to sell it to somebody else. Whether I sell it straight stock sale, fine. Or I could do what's called a layaway sale. You know, I'm not sure if you know what layaway means, or, you know, where you put a down payment on something, or here, hold this, here, let me give you this money, hold it for me until Friday. That's kind of like the same thing. Okay, if I own it at 96, if I buy it tomorrow, 96.60, that's what I own it for. Now I can sell it to someone else at 97, which is more than what I paid for it. And for that, they will pay me $2.07 per share. Well, that's 2%. And 2%, well, that's over 100% per year. 2% every single week. So it's a weekly option, which means it expires on Friday. And then there's another one the following Friday. And then there's another one the following Friday. So every time one comes up, there's an opportunity to sell another covered call against it. Jay Moore, so Mara is a normal stock purchase. No, it's not. It's the exact same as all the other ones. Let me show you, Jay Moore. Mara. M-A-R-A. Here we go. Okay, so here's Mara right here. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Down, up, down, up, down. Here we are right here. What's going on? Okay, so the high of the year is 31. The low of the year is 12. Well, that's more than a 50% drop from the from the high of the year, where it is now. All right, so let's say I like Mara. The current price is $14.29. Now, personally, you got two choices. The 14s, which are going for $1, or the 1450s, which are going for 81 cents. Now, the safer trade is the 14 because it's already in the money. Now, the 1450, it may be a better return, but the stock has to go up. And I don't like it when a stock has to go up. I like it to just leave it alone and not have anything going. Mark, two questions. One, Kohl's is reporting earnings next Tuesday. Will that affect where you, wait a second. It just disappeared. Oh, he retracted that. He gave me a question, then he took the question away. I have no idea why he did that. I was reading it. That could be what it is. Who knows? All right. So anyway, Jay Moore. Can you explain how you can lose money and how to reduce your losses? Oh, AK, we're going to talk about that in a second. Let me finish up with Jay Moore. He's talking about Mara, M-A-R-A. So, Mara, currently you can't argue with the prices. They are what they are. $14.28 is the current price right now. So if I buy it right here, right now, $14.27. See, it's changing because it's trading after hours. But these numbers don't change. Anyway. Okay, so the 14s going for $1. It's a safer trade. Okay, I like safety. Even safer than that would be the 1350s. It's going for $1.25. Okay, so if I'm selling it at $13.50, I'm buying it at $1.27. Well, how do I figure out the math? All right, well, if I'm buying it at $1.27 and I'm selling it for $13.50, I'm losing $1.23. So you take $1.23 off of this, and it no longer makes sense. Okay, AK. All right, Mark. Kohl's is reporting earnings next Tuesday. Will that affect where you roll your options this Friday? I would like my options to expire worthless this Friday. Okay, so next Monday, I won't have any options on Kohl's whatsoever. So when they have their earnings reports, I'll get a good idea on Monday morning what Kohl's opens up at. Now remember, I'm into Kohl's at 22, and the Kohl's at the moment I think it's like $12. Hold on a second. Kohl's, KSS. Okay, so I'm into Kohl's at 22, and right now it's at 11.37. So the 22 is like way up here. It ain't no way that's going to fill for quite a while. So here we are now. I sold, I think, the 12s or the 1250s for this week. or was it the 13th? I don't remember at the moment, but I think it was somewhere around here between 12 and 13. Okay, and I collected over 1%. As long as I'm getting 1%, I really don't care where the stock price is, because my main goal is 1% per. So put it this way: if I have $100,000, my main goal is to bring in $1,000 per week. That's 1%. Do I really care where the stock price is? Not really. As long as it's a good quality stock that consistently increases its dividends every single year for at least 2 decades, and it has weekly options. As long as I'm bringing in $1,000 or 1% per week, I really don't care what the stock price is. Okay, until it hits my strike price or my purchase price. So if 22 is my entry on this, and right now it's at 11.30, well, yeah, this week I'll sell the 12 or the 12.50s. Okay, if she goes up, well, then next week I'll sell the 13s or the 13.50s. If she goes up further, well, then I'll sell the 15s or the 16s. And I'll keep selling as she's going up, 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 up until it hits my target price. Well, that's the price that I paid for it. Okay? I'm not really looking for a profit on the stock. I'm looking for cash flow. There's a huge difference. Because then we had a little bit of issue with some of the subscribers saying, well, it's not making any sense. The stock price is still going down. I said, yeah, that's what they do. Stocks go up, stocks go down. He says, yeah, but I'm making my 1% every week, but the stock price keeps dropping. I said, yeah, what's your point? Well, I got this unrealized loss. Yeah, what's your point? It's an unrealized loss. Until you take it, it doesn't mean anything. Okay, so let's say hypothetically you buy a house for $100,000. And then they say, well, the house is only worth 80. I'm only willing to pay 80. Well, no, I'm not going to sell it because I got it at 100,000. It doesn't make sense to sell at a loss. It defeats the purpose. Okay, so you own the stock. So you collect a dividend every 90 days. So you collect a premium every week. All right, let's keep on going. Did I watch Trump talking tonight? No, I was right here. He mentioned a couple of stocks. Didn't know that. Okay, so AK, can you explain how you lose money and how to reduce your losses? AK, I can tell you exactly. Okay? Most people, when they're beginning, they hit the wrong button. They sell something instead of buying it, or they buy something instead of selling it, or they panic and they sell at a loss. Okay, it's not a win, it's not a loss until you take it. Okay, profits are not profits until you take them. Losses are not losses until you take them. So if I bought Kohl's at 22 and right now it's at 11.37, well, that is a 50% loss if I sell it at 11.37, if I sell it now. Yeah, that's a 50% loss. But if I have no intentions on selling it whatsoever, ever, until it hits 22 or higher, well, it's not a loss, then is it? It all depends on it's all perception. Okay, if I sell it at a loss, I lose money. If I refuse to sell it at a loss and just keep rolling it over or keep selling covered calls every week, and when I sell a covered call every week, I'm going 2 to 3 strikes out of the money. I'm going far enough out so that it's not going to put me in jeopardy of losing anything. Mr. Ayub, bro, do you go to the gym? You're looking big. I appreciate that. I do play soccer once a week, sometimes twice a week. Okay, the older you get, the funny thing is, the older you get, the longer it takes to recover. Okay, when I was younger, I could play 2 games a day, But nowadays, it takes 2 or 3 days to recuperate from 1 day of playing. Do I still play? Yeah, because eventually there will be no more games for me. So if I can get out, even though it takes me 3 days to recuperate, I still get out there and play. Secretariat, how are you today? Yes, you are absolutely right. Secretariat says, but James, those declines on paper do cause a psychological pain. You're absolutely right. Sometimes it does. Okay, but here's the thing. What I found, Tim McCarty, how are you doing there, Tim? Nice to see you. I haven't heard from you in a couple of days. What happens if my Kohl's shares get called away? Well, they wouldn't get called away because I keep my eye on them twice a day. And I should, now I have to admit, I haven't set any alerts. I probably should set an alert that, hey, the option is being, or your stock is at risk of being called out. I should do that, but I don't. I should. If it doesn't hit the price, etc., do you just end up holding onto the stock? Yeah. Okay, that's the AK. The reason for investing in the first place is to make money. So in order to make money, you have to buy something, you have to sell something. And yes, I do understand the game. Secretary, you know, you and I, you've been here for a long time. You've been here for about a year. Okay, because I remember you were here last February. Okay. Hey, how about them egg prices? You know what? Here's the funny thing about egg prices. My sister has a shitload of chickens. So once a week I go there and get like 3 or 4 dozen eggs for free. I bring her all my table scraps. I haven't paid for eggs in about a year. So I honestly have no idea how much eggs cost. Isn't that weird? But I did hear they're getting rather pricey. Just cause I had to start eating crow eggs. Okay. Okay. You doing stock Serpto, Forex oppositions? No. Okay, I only do dividend stocks. That's it. I don't do crypto. I don't do Forex. I don't do any of that stuff. So AK, to answer your question, if the stock doesn't hit my price, do I just end up holding onto the stock? Yeah. I mean, that's the purpose. You buy a stock and then you sell a covered call every single week to create cash flow. And then you get to collect the dividends every 90 days. Well, that's always lovely too. And that's it. We are past 11:30. Well, alrighty then. I'm going to call it a night. I'll see you guys again tomorrow night. Same time, 9 o'clock Eastern Standard Time. Alrighty. So you guys have a great night. Good night, good night, good night. Come on. There we go. And now the end is near, and so I face